All right, everybody. Better luck on this next time. I was sharing, and I'll send it out. We're posted on our website. The bull case for small caps. One of the top strategists on Wall Street for the last several years has been FundStrat's Tom Lee. I met him, and I know him from back in the day at J.P. Morgan. Very thoughtful guy, very big picture thinker, and he's very bullish on small caps. So we wanted to pull him in here to set the table. He believes small caps can outperform by more than 100% in the next few years, basically making up the valuation discount as we move ahead here. So with that said, I want to move into some of our best ideas and get those posted here right now and jump into that. Bear with me a moment. And here they will come. Okay. Well, firstly, let's set the table here. See if we can rotate this chart. We're looking at the post-election performance, and although it's crooked, if you tilt your head a little bit, you can see that leadership has been definitively in small caps and in AI related ideas, and crypto, kind of the Trump trade. Crypto leading the way, followed by these other areas in small cap and AI related technology companies like Planeteer. But small caps are right in the mix and selectively picking up. So I want to show that. Our first idea that I would like to share before we go into that, just a little overview with our update on our director's letter and our overall performance. And here it is. It's through October. You can see the long-term alpha generated by Singular, quite significant. Overall, and this is what we do day in and day out, bring it to the table, etc. We also do provide a weekly email that summarizes the commentary of the market and some ideas as they're appreciating. And let's see here. Going down a little bit, we can see that the coverage list itself on a raw return basis is up quite a bit. This includes some buy holds and a lot of crypto names that are buy venture driving this, up 43% versus the S&P up 27 and the Russell up 20 and the microcap ETF up 18%. So we're getting some alpha from the coverage, and that's what we aim to do here. Also today, some value stocks gaining some action in the energy patch and energy services. We had an announcement of Adams Resources receiving an all-cash bid from a private equity entity for $39 cash. Our target was $38.75, so we're pretty close on that target. And congrats to the guys at Adams Resources and to our subscribers that stuck with that over the last year or so with energy. Sometimes you just have to be a long-term investor, and strategically there's a lot of value out there, and we should see M&A increase, particularly in that area. So wanted to now let's take a look at some of our ideas here. Our top growth idea is Quinn Street. A little bit about Quinn Street. Stock trades about 22-ish. They are a performance marketeer on the internet. If you ever look for like housing, home supplies and insurance, they're the leader in that, in delivering ads when you do a raw search, and that's how they get paid, on that deliverance for those verticals. And they have posted some great earnings, vastly beating our expectations. So our analysts hiked his price target. They beat the number significantly, 22 versus an estimate of 14. And on the revenue side, they came in at 279 versus 225. So big beats. Guidance also raised. Again, this is the growth and the resuscitation of insurance after COVID coming back. And so they're capitalizing on that moving ahead. They expect it to continue the ramp up in auto insurance spending and to continue to grow strongly into next year. So we increased our target to 27. You can see that earnings are expected to grow another 25% after a big jump up this year, looking at 81 cents up to $1.01. And revenue also nice growth. Big year this year in fiscal year 25, growing 60% to nearly $1 billion. So we think Quinn Street, which technically also is looking pretty good, is a good growth stock to look at for the next 12 months with very good upside. Next idea is a value idea, or actually another kind of GARP value idea that we want to talk about. And GARP growth and value idea. The company's called Opportune Financial. The symbol is OPRT. A little bit about them. They're a fintech player. Stock trades about 280. We've got a 550 target, a lot of upside there. And let's go down. So they're involved in fintech, focused on credit to so-called thin file or no file borrowers, a very underserved part of the market. The primary market is comprised of unsecured personal loans and some secured loans, and us providing associated financial services for low and moderate income individuals who have limited credit or no credit history. So we see here that the stock trades very cheaply. It trades at about 12.5 times the earnings estimate for fiscal year 24, ending in December, and about 6.7 times the estimate we have for next year. So growth really ramping up into next year. We see revenues about flat, so internally they're making some changes here to drive that number. So let's take a look what they're doing. They're focused on this market, and they're decreasing some of the bad book they have with strong performance on their so-called front book, and loan growth and loan volume that has been dinged up a little bit with the COVID recession affecting that low-income market is starting to firm up. And we're impressed by the economic model targeting their return on equity in the high 20s. We think that's very achievable here. That'll drive the stock to 5.5. Let's take a look and see what they're doing here to shore up this turnaround. And it has to do with better algorithms and sourcing and approving loans. Very quick approvals. They have a high amount of technology that an algorithm, like I mentioned, that helps them get through this. New growth opportunities. They're teaming up with Western Union, and that is an area that should prove to drive some of their growth. They also have access to capital markets, which is important. New warehouse agreement worth $245 million has been brought in to provide more capital to get spread on and grow their earnings. And so that's going to help shore it up, combined with reducing the bad loan book and increasing the good loan book based on their new algorithms and high level of qualifying their clients very quickly, their investors. So 280 ballpark target, $5.50. Opportune, OPRT Financial. Here's our target going back to Adams Energy. Stock price target we have is $39.75, and again, as mentioned, taken out on a cash basis for $39, about a 40% premium, roughly to the current quote. Adams Resources. Hate to see them go, but it's been our clients are very happy about this one. Okay, I want to move on to our chart choices, favorable charts that we see. Let's see if this comes up here. Trying to do that. Hopefully everybody can see that. We've got three ideas here. Starting with Daktronics. Move this screen over so I can see this a little better. Daktronics, they make large-scale scoreboards, digital scoreboards and displays. I believe they're in many of the large stadiums. They also provide sound systems and, again, smaller digital displays, really capitalizing on the world going digital, and TV displays in high schools, even high school football stadiums, and on highways and in emerging markets. So we've got a very good growth opportunity. Stock, as you can see, technically it made a high in here back in June at 14.5. It's a multi-year high, and again tested it again, pulled back. They are lapping. Here's the confusing part. It's underfollowed. So a lot of the money here is quant money, just buys earnings surprises or earnings growth. Well, it's more of an EBITDA story, and they're lapping a COVID market, so their numbers are extra good, and they're catching up on a backlog that was really built up during COVID. So happy to say their new orders are growing again, up 11% after that excess buildup from COVID. And this really should drive their numbers, as you can see, the estimate, again, resuming growth to, I guess the street's got them at $1.17. So this is Daktronics, looking attractive on a technical basis and one of our chart choices. We move on to our next chart choice. Bear with me here. And this is Superior Group. They make uniforms for apparel, also corporate uniforms for healthcare, industrial, and commercial. And they have an outbound telemarketing, e-marketing division that has some pretty high growth. As you can see, they popped a pretty good quarter here, earnings up 74%, really just dusted the estimates on the street. And that's why the stock is, again, they had a tough second quarter, as you can see here, with earnings down 50%. Revenue were relatively stable, revenue growth up 2% for that quarter. That was caused by a shipping delay, and they have bounced back from that, and revenues again growing and beating the estimates. So here's a stock that I believe the target, our fundamental target is 21, starting to make a move, gapped up on that earnings, and has pulled in here very nicely to what is the 50-day support. Yeah, you know, technically you've got good crossover here, the 21-day crossing the 200-day, and you know, the relative strength's relatively good and picking up at 83, 100 being tops. For our third choice, from the chart room, we have a financial, of course, right? Silvercrest Asset Management, they provide advisory, discretionary capital management for family offices and ultra high net worth individuals. This company is well positioned as the markets improve and spread out from the Magnificent Seven. Their strategies are more value oriented, and they should pick up. And they're benefiting from a solid third quarter, although you wouldn't know it from the EPS down 28%. There's some one-offs there, and 2% revenue growth. But the real story is capital inflows, money coming back into equity, and that's where they thrive. And they have to meet demand and growth of their company. Their margins are off due to hiring, and it's a good long-term investment. So they should see a very good ROI on that going into 2025 as those new fund managers and marketers raise capital and make more money on what they're doing there. So it's Silvercrest Asset Management breaking out here, good volume. The market likes the report, solid earnings, and with the $1.60 estimated for next year, it's trading about 12 times and a stiff discount to the market. So that's our third chart choice for the week. Want to conclude our call. It's a little bit of a commercial for our upcoming conference. We have our Best of the Uncovered conference. It will be December 12th in San Francisco. You can join us in person or online like you are now, and we'll have some of our very top ideas presenting there. So please stay tuned and tune up for that. We'll get some time set aside to attend that. As we're in I'll show you, we're in a new bull market for small caps. We've been grinding it out here. I'll conclude showing this chart, this picture. This is the Trump election, taking away, cutting back on regulations and cutting interest rates. Two very positive things for the asset class. And as you can see, the index, the Russell 2000, responding very positively with a high volume breakout. Going back, you can see that this ends a grinding market, a bear market that really started, in early 21, right here. As you can see, in early 21, March 21, 234. So we're finally breaking out above that based on those factors. So join us for upcoming best call ideas. Join us for our conference next month, December 12th. And if you have questions, please email research@singularresearch.com on anything topical here, or email me directly, robert@singularresearch.com. And I want to thank everybody for joining us today. Have a great day.